guys, I'm sitting here with Steve Schauer with Security National Mortgage. Steve's been a lender here in Las Vegas for over 30 years. I've been working with Steve for about 5 years, and I've had the pleasure of doing several loans with him. I wanted to introduce you to Steve. We've already met Linda, and if you haven't, you'll meet her in another video in the future. But I really wanted to introduce Steve and talk to you guys about the importance of working with a highly qualified lender, somebody who knows the market and all the different aspects of it, especially in Las Vegas, because it can be a very unique market. And the importance of not only having that communication with your lender, but working with an agent and a lender hand in hand so that they're working both on your behalf. So Steve, let's talk about what should they expect from you? What should a potential buyer expect from their lender?
Education.
Education, okay.
Learning about the mortgage process, the mortgage business, what we do.
Okay.
I thrive at educating people about the business. I've always said credit, income, assets. How do we qualify? Most lenders out there just say, you do or you don't qualify. I go into what the qualifying is, why this needs to be this.
Okay.
How does this make sense?
So you not only tell them, you don't just say, oh, sorry, you don't qualify, or yes, you do qualify. If they don't qualify, you're going to break it down as to why they didn't.
Correct.
And then maybe some steps that they need to take to get to where they want to be?
Yes. Yes, I've always done it. I've always loved the educational part of it.
Okay.
Teaching people about loans makes them more aware of what they need to do to buy a home.
Okay, all right, great. What are some of the biggest things that you get from potential buyers coming to you or maybe kind of hesitant to talk to you? What are some of the pushback that you get?
I don't make enough income. My credit may be good or bad, I don't know, and I don't have a down payment.
Okay.
There's your major three things. Because to buy a home, three major things: credit, income, assets.
Yeah.
Credit, income, down payment.
Okay.
You have decent workable credit, and it doesn't have to be perfect. Everybody thinks that your credit has to be absolutely perfect out there. It doesn't. And if you have a good job, we can look at that and go through the whole educating of how we show income and everything like that.
Okay. So, and I know every plan is different, every person is different. What is a credit score that somebody may be like, hey, you know what, my credit score is only this much, but maybe there's something out there for me?
There are several loans that go down to lower FICO scores. FHA is one.
Okay.
Typically a 580 is about, what everybody has to realize, and again, here's my educational part I like.
Yeah.
We use a system. Every mortgage company out there uses a underwriting system. Nobody in today's world sits there and thinks about, do I like this person or do I not like this person? You run through an automated system.
Okay.
And that's fair in my opinion. That's the fairness of a loan. And that system tells us if they like your loan or not.
Okay.
They being FHA, VA, conventional. So if your score is lower, but you're compensating that for maybe a little bit more down payment, that would be acceptable.
Okay.
Or your score might be a little bit lower, but you have great income. Might be a little more acceptable. So there's no exact score that says, okay, I have to be this score to purchase. It's all about the system. But we typically say about a 580 score or higher.
So it sounds like to me what you're saying, and I think this is going to be the theme of this video, is when in doubt, reach out.
Very good. That's excellent
So,
saying. 100%.
okay. All right.
I like talking to people and seeing if they can or cannot. Most of the time people are surprised that they can qualify.
How long does it take to tell somebody, hey, you're qualified, or now's not the right time?
5
I
to
know
10
you never
minutes.
say no.
I have a hard time saying no.
So,
You're correct.
And I love that about Steve. He's not going to tell you you don't qualify. He's going to tell you right now is not the time for you. This is what we need to do.
Correct.
Right?
We need to put this plan together to this. 5 to 10 minutes.
Okay.
I've done loans so long that I could tell right away if someone's going to be able to purchase or not.
Okay.
Just by a couple simple questions. We can talk about your credit. We don't need to pull it right away. There's a lot of myths out there about credit. Everybody thinks that if I pull credit, it's going to automatically go down. Not really true. We could talk about your income real quick. We could talk about how much you have for a down and put you on a plan to help you grow that or make everything better to qualify down the road if you don't qualify right now.
So do I have to come into your office then with all these paperwork to
everything,
get pre-approved?
nowadays everything's on the phone.
Perfect. Okay, great.
Everything's on the phone. We have all secure loan app scenarios and you could upload things to me if we need to see that. But typically a 5-minute conversation is I'm going to be able to tell you look great to purchase and let's take it a little bit further.
Okay, great. And then you're also able to break down, this is what you're going to be qualified for.
Correct.
So that when you as the buyer start your buying process, you know what your buying power is. correct?
Correct. And we never qualify. The myth out there is we never qualify someone for a house price.
Yeah.
To us, it's all about a payment.
Yeah.
Everything's about a payment. How much your payment will be against your income with your debts. How much your payment plus your debts divided by your income.
Okay.
That we call a debt ratio. To us, everything is a debt ratio. We never walk around and say, wow, we look at these people and they look great. We say, what's their debt ratio?
Okay.
How are they on that part? And I can tell people how we calculate that.
And if you could go a little bit deeper, what is the debt ratio?
So house payment has to be counted in debt ratio, number one.
Okay.
House payment plus any debts you have that show up on a credit report.
Okay.
Typically car payment, credit card payment, student loans, and any child support or alimony.
Okay.
There's your major debts right there that we use. That plus the house payment, and let's just throw a number out here, your house payment of $2,000 a month, plus maybe you have another $1,000 a month in credit cards and car payment, that's $3,000 a month, has to be about half of your income.
Okay.
Half to a little bit less than half.
Okay.
So you need to make about $600 to $6,500 a month in that scenario.
Okay. And that's not really that much if you think about the average income in Las
Correct.
Vegas, especially if you're a dual income household. $6,500, $8,500 a month in this range aren't hard to do.
Correct, and that's where I get from most people. They say, wow, I do qualify for that much? I didn't think I would.
And then the importance of having that education and working with a solid real estate agent is then our job comes to go find you that monthly payment, that house that is in that price range that's going to meet that monthly payment.
We take that, give it to you,
Yep.
and you find that price range.
Perfect. Now, I'm sure another big fear or issue that you get right now is the interest rates.
Everybody.
You've probably been hearing that for a few years now. You know, it's crazy. It went from, oh, interest rates are great, to, oh my gosh, I can never buy now. Can you talk to me a little bit about the interest rates and how you guys handle that?
We did see rates very, very low. We all know that. And nobody realizes that, in my opinion of interest rates, they were low, they were low by government kind of interjecting into the rates.
Yeah.
Okay. Because a common myth out there is that the government set the rate, and the government does not set the rates. The rates are actually a traded commodity. Mortgage-backed securities are traded. The government helps kind of fluctuate the rate a bit by the prime rate that they set, but rates in general, yes, are a little high, and we do tend to see them coming down a bit right now, which is a great thing. But also, in my opinion, I think we need to be a little bit higher on rates right now. We all have to remember what happened when rates were at 3%.
I do. I remember those days, and my hands still hurt from typing 5 or 7 offers for one client on 5 or 7 houses.
Correct.
Hoping that one would accept it.
Everybody wanted a house. Everybody was purchasing. House prices went up.
Yeah.
Well, that's a standard thing of inflation as well. Rates low, government keeping rates low, government keeping everything low, inflation higher. Rates high, inflation lower. We will see rates come down when inflation starts dropping. Then rates will start dropping slowly. Now, will we be at the 3s again? I don't think so.
If we were at the 3s again, you and I think both share this opinion, we would see a flood of buyers back into the market, and then when we have a flood of buyers in the market, what does that do to the home prices?
That raises home prices ridiculously. Now, one seller or one homeowner would say, that's great, I love that, but then no one can afford the houses, and it outprices everybody on a home.
Yeah.
So I firmly believe that we will see rates come to a even pace this year, an even level in, I'm just going to throw out into the 5 and 6s.
Okay.
That's where I really think.
Which are pre-pandemic numbers.
Which are pre-pandemic. So I've always said this, 3% is too low, 7% is too high, 5s are great in the middle.
Gotcha.
It's a good, even economy that makes things go. Hence, houses go up slightly and people purchase, and we're not looking at a crazy 25% increase in house prices.
And having that lower interest rate will help the market on both sides, because now you will have current homeowners willing to sell their properties and maybe take out a loan on a new property because they're not paying in the 7s.
Correct.
So it does make it, that does open the market a little bit.
Correct. Now, what we're also saying though right now is it's a good time to purchase though, even though rates are a little bit higher, because we can always refinance the loan.
True.
You're in the house at least now at a great price. What's going to happen to houses when rates drop a little bit too?
They're going to go up.
They're going to go up a bit. So it's a great time to purchase with that, with the rates just slightly higher, and then you could lower your payment when we do drop on interest rates.
Absolutely. You're with Security National Mortgage.
Yes.
Tell me a little bit about the company. I've heard of them. I'm sure many people have kind of the insurance side of it.
Yes.
But maybe not so much the mortgage side. So what's different from maybe other brokerages you've worked for, and what can you offer with your experience to potential buyers out there?
Great question, and a lot of different scenarios on this that are better in my opinion. Security National Mortgage is a publicly traded company.
Okay.
An insurance division and a mortgage division. With both being successful, it helps to give programs that most other lenders don't have, like our DSCR loan that goes down to 500 FICO
Which is
score.
wild, okay.
In addition, we have a great private money sector as well, where we can do a private money loan. We call them hard money loans. Yes, the rate's a little bit higher, but no credit score, no income verification, and 25 to 35% down payment on that as well. So we have a lot of different options. Now, in addition, yes, we do hold our own mortgages. So we do have our own underwriters as well. We do underwrite the Fannie Mae, Freddie Mac guidelines, but we're able to make a little bit of exceptions on some of them. We in the mortgage business call that no overlays on the mortgage. So there are some bigger companies out there that might want to put an overlay on top of what Fannie Mae, Freddie Mac asks for. That overlay might be, well, instead of asking for this much money in reserves, we want this much money. We don't do that. That's what's great about having a company that is solid, financially solid.
Okay. So and it sounds like because you have your own underwriters, your own team backing you, that if everything's in-house, the communication's better and things maybe run a little bit quicker and smoother.
There's one of the major differences in using us versus a major that you see on TV mortgage company, or someone that owns a ballpark or a football stadium or whatever, is we're local. We're local, my team, all of us, we're here.
Okay.
We know the Vegas market. We are licensed in every state, but we understand loans, and we've all been doing it. Matter of fact, I have a couple of assistants that have all been with me about 10 years minimum, and we know each other and how we all work, and it's a great system.
So you bring up a good point. Talk about your team. I know you have a big team, so why have such a big team? What's the importance in that?
Customer service.
I love it.
Yeah, customer service, 100%.
Okay.
When I'm doing things like this, my team is still...
They got your back.
They still have my back, calling that borrowers, making sure that loan is going. Now, I'm not a hands-off person. This is not a, oh, you talk to Steve once and then pass it along. Oh, no, I'm talking to that borrower as well, making sure I'm on emails as well, making sure I answer some of them as well. And we all just work together so well because we've been together so long.
That's great. I love it. So I want to introduce you to Linda Vo. Linda works with Steve Schauer. She's one of his senior agents.
Yep.
You've been working with Steve for a little over 2.5 years, right?
A little over 2 years.
So introduce yourself to our viewers out there, Linda, and talk a little bit about you and what you can do to help them.
Yes, Justin. So I became a lender because of my personal experiences trying to purchase a home. I've had good experiences with lenders, and I've had bad experiences with lenders. So for context, prior to being a loan officer, I was a union mixologist. I know it sounds snobby, right? Essentially, a fancy bartender.
There we go. I was going to say.
I was a bartender at the Cosmopolitan here in Las Vegas for 9 years. So I received a pension, great hourly, but I also worked at a pool as a bartender. So getting me qualified was incredibly difficult. And so with that experience, I had a great lender, and like I said, I've had other lenders where you don't qualify, call me when you do.
Wow.
And as somebody who puts themselves out there as somebody who really wants a home, I wanted to buy a home, this is the way I was raised, and I had my heart on. And to be shot down and rejected, because who likes to be rejected, right? But for it to be done so harshly really hurt me and kind of set me back. I was like, I don't want to talk to anybody. I'll talk to my realtor all day, and I'll shop on Zillow all day for a home, but I don't want to talk to a lender again because it sucks to be told no, no, no. But when I did run into a good lender, and I model myself under this lender as well, is you don't qualify now, but this is what we need to do to get you to qualify. And so understanding and empathizing with our buyers out there, you really want this, and you have no idea how to go about qualifying for a loan. And it's just not okay to go into a bank, give them everything, basically put your whole life on the line out there for them, and then just, you don't qualify. Call me when you do. Well, what do I do? What?
So it sounds like you're really empathetic.
Yes.
Especially to maybe a first-time home buyer who just doesn't understand the process, or to somebody who maybe owned a long time ago and they don't think they can buy again.
Correct.
It sounds like that's somebody that would definitely want to reach out to you.
Absolutely.
Let me ask you this. Do you think it's a waste of your time when somebody calls you that maybe can't qualify right now?
Absolutely not.
Okay.
Gosh, this is what I have to emphasize with our viewers out there. You know, and this is why I really enjoy working for Steve, because he emphasizes that educational part of it. Never ever feel like it is a waste of time for anybody. You want to buy a home? I want to get you that financing to buy that home. Justin and Mike wants to help you find that home. But how do we get from A to B? It's not an overnight thing. There are some people out there who call me and I'm like, yes, you are in the position to buy a home, you're good to go. But there is a big part of the population of that they don't qualify right away. And we need to tweak a couple of things, like their credit. You know, you don't have to have the most perfect credit. Or I get, people telling me, I'm working on my credit. Well, my follow-up question is, how are you working on it? What are you doing to work on your credit?
Okay.
Are you working with a professional? Because what I can offer as a lender is, you may be working with somebody to fix your credit, like one of those credit restoration companies. My services don't cost anything until you go to close on a loan. If it takes me a year, 2 years, but it means that you come back to me and you trust me, then it's all worth it. That's the whole point of it. So I'm gonna look at your income, I'm gonna look at your credit, and I'm gonna tell you how much you need to have saved to buy that home, specifically for you to buy that home. And again, I can only give you suggestions on your credit because that's probably one of the biggest hurdles people have to get through is their credit. But I can give you suggestions. We want to assign every dollar a job. Are we going to use that dollar to pay down debt, to lower your debts, and to increase your credit score? Because that doesn't necessarily always mean that it's true. Just because you pay off debt doesn't mean your credit score goes up. Or are we going to take that dollar and put it into the asset portion? Purchasing that home. What would make more sense for you in your particular situation? So we look at that, and then let's say you don't qualify for another 3 to 6 months. I'm gonna keep checking in on you. I wanna know, hey Justin, where are you at on the plan? We laid out this plan for you. You wanna buy in a year, and you've been doing everything I've asked of you for 3 months.
Where are you at?
Where are you at?
And it's the same philosophy that Mike and I have. We really appreciate you coming out and sharing a little bit about yourself and what you like to do and what you can do for the potential buyers. But like Linda said, Mike and I are the same way. If you're looking to buy next week, next month, or next year, we're here to help. So make sure you like and subscribe, smash that bell icon so you can get notifications. We're gonna have Linda and Steve's information in the description of this video below, their email and their phone information. Please reach out to them, reach out to Mike and I. We'd love to help you out. Until then, guys, we'll see you soon. Remember, putting out 2 videos a week. We're always trying to send you the best quality content we can, and informative as well. So if you have any suggestions, don't be afraid to put it in the comments below. All right, guys, we'll talk to you later.